Welcome back to CEO Money. I'm Michael Yorba. Thanks for joining us. All right, Tim Weintraut, Alpha Wolf Trading, LLC. Tim, welcome to the show. How are you?
Hey, thanks, Michael. I'm doing great. How are you?
I'm good. All right. Tim, a little background on you for the listening audience. They can get a flavor for who you are, what you bring into the table, and then let's talk about the market climate.
Okay, a little background on me. I've been involved in the market since my early 20s. I'm now 52. Not a full-time active trader, obviously, in the early days, but as social media progressed and day trading became more prevalent, I decided to get into that. So I'm kind of a hybrid trader, fundamental, technical analysis, day trader, swing trader, long-term investor.
Okay. Now, what do you see out there on the horizon? Current market climate, favorite sectors, things like that.
I think right now we're going with blockchain and Bitcoin mania. I don't know if you saw that LFIN over the last couple of days, but pretty crazy stuff happening out there.
Mm-hmm.
But, I think at some point, a lot of people like to say this is going to end badly. This reminds me so much of the .com craze that, and it did end badly for a lot of companies, but I also think that, it brought to surface a lot of good companies like Google and, Amazon. And I think the same thing will happen in this technology too. I think there will be some definite horror stories out there, but I think there will also be some long-term winners.
Okay. So your favorite sectors is the cryptocurrencies, blockchain?
No. My favorite sectors, which was a very strong sector this year, which is robotics and artificial intelligence.
Mm-hmm.
ETFs, bots, BOTZ, Robo. There's a new one out, AEIQ. I happen to like that sector. I think we're in the infancy stages for robotics. And I think next year infrastructure will be probably a good sector to keep an eye on.
Yeah, all right. I've been thinking infrastructure for a while, but timing is everything.
Timing is everything. But, I look at a company like GE, and I know everybody hates that company right now, and this is the investor side of me. This isn't the day trading guy.
Right.
It's a big, thick stock. There's a lot of bad news that's already out in that stock. Could it go lower? Sure, it could. But I think, as a long-term investor, to start dipping your toe at these levels, I don't think you're going to hurt yourself too bad.
Yeah, 17 after coming down from the 30s. Yeah, okay. Recently.
HWCC, it's a wire and cable company out of Houston. And I'm just thinking about this as an infrastructure play. Oil industry coming back a little bit.
Mm-hmm.
Smaller stock, but some activist investors getting involved there. And I think that's a story to keep an eye on.
Okay. All right. What else you got? This is interesting to me.
Let's see. Mark and GSUM. Those are two AI plays. They're very low float plays. Mark is a very interesting story. I'm in Las Vegas. They own Vegas.com. So it's a very low float, but they have a AI division called CanCan, which is big in China. I think it is one. They just had a strategic investor pick up shares. Let's see. Well, that was announced today, I think at $12. I think that's one to keep an eye on. High risk, I'll repeat it again, high risk swing type trade.
All right. We only have just so much time on this segment, so I just want to hit as many high points as I can. One of the things that you wanted to talk about today was about insider buying and identifying the trade. Walk me through that. Okay.
Huge for me. Now, it doesn't mean that it's going to drive the stock higher. But to me, there is only one reason why insiders buy, and that's because they think the asset is undervalued. And I'm not talking about grants or stock options. I'm talking about them stepping up to the plate and making a significant buy. If you're looking at them just, picking up a couple thousand shares, not a big, but if it's, if they're stepping up to the plate, spending $100,000, $200,000, they're human beings just like you and I. They're only doing that for one reason, and who knows better what's going on with the company than somebody on the inside.
Exactly.
Right, Jim Ed Baxter, Bryson Creek Capital. We saw that with Jamie Dimon back when
Exactly.
J.P. Morgan Chase was one of those stocks that nobody wanted.
Diamond.
He was buying it heavily himself, betting on his own management ability. So we've seen that ourselves. I go back about 200 years, I guess, as far as the stock markets are concerned. So I'm a little older than everybody on the planet. But the interesting about that is that I remember back in the days we used to study Vickers, stocks research, which spent a tremendous amount of time talking about insider buying and selling. And one of the things that you just jogged my memory of when I saw that was some guy named Jeffrey Schilling sold 3.6 million shares of some company named Enron, and probably betting on the fact they may not have gone as well as he thought it would have gone. So when you mention insider buying, those are the two things I think about.
Absolutely. It's something that it is a big issue for me, more for my swing or long-term portfolio. I mean, we spoke to GE earlier. Look what the new CEO did. He went out on an open market and stepped up and bought shares.
Well, he's smart. We know that GE at one point was the most outperforming stock in the history of the stock market for about 40 years. People forget that. Even though the company's having their own issues fundamentally, for the most part, it's still GE.
Right. It's not going away. Okay, GE is not going away.
No.
So I think for a long term, if you've got a long term time horizon, you're not going to get hurt if you start building a position here.
Well, that's the Warren Buffett in you, and going back and looking at pure value. Obviously, that the stock is trading probably, I'm just guessing right now, probably below its asset value right now. We'll see what happens going forward. But in looking at a value play like that, you're all right. That's not a stock you want to flip or trade. It's probably a stock you want to accumulate. Not that I'm giving an advice about accumulation there.
Right, and I'm not doing that either. These are just suggestions, but I think they're pretty solid ones.
All right. As you see the economy just keep poking along here and building steam, because some of the people that we trade with, and I've been trading since 1980 myself, are looking for continuation here as we go into 2019.
I think we will. We've moved pretty fast, and I think we will have some kind of a check back. But I still think that there are a lot of positive things happening out there for the economy. And I think there's some sectors that could, for shippers, for example, which have been beaten up for a long time. If we do get an infrastructure play here, I think shippers actually will wind up benefiting. So I think that's a sector to keep an eye on. I think the market still has room to go.
Okay.
Well, we have a guest that comes on and always says it's a trend until it's not a trend. So evidently, it's still a trend.
It is definitely a trend.
All right, but just to sum it up, we got about a minute left. You like robotics, you like infrastructure, and what was it? Cryptocurrencies? Is that what I heard?
Well, I think the blockchain technology. I think there's still going to be a lot to play there. Highly speculative, highly risky stuff, but I think it's in its infancy stages as well.
All right, that sounds good. We got about a minute left. Anything special you want anybody, our audience, to know about you? Where to find you? What your fortes? Looks like they're playing the music on us. I guess we're gonna have to have you back, and we'll go into that later. Okay?
That sounds good.
All right. Thanks so much for being a guest on the show. Really appreciate that.
Thanks for having me.
My pleasure. Tim Weintraut, CEO, Alpha Wolf Trading, alphawolftrading.com. You've been listening to CEO Money with Michael Yorba and Ed Baxter. This segment brought to you by Tycon Partners.